In the next 4 minutes, I'll explain how to save hundreds of thousands of dollars legally by saving taxes throughout your lifetime with something called Mega Backdoor. Currently, in 2022, individual contribution in 401k is limited to $20,500. Many big corporations contribute 50% of your contribution. So, in 2022, if as an individual you contribute to the maximum and your company contributes at 50%, the total amount in your 401k is
$30,750.
But is that really the limit? Not really. The reality is that the limit is defined at $61,000. The sum can be reached by adding the employee and employer contributions. So, if your company is not contributing more than 50% of your contribution, and you cannot add more than $20,500, how can you reach that $61,000? What is the trick to contributing the remaining $30,250? And why would you want to contribute more? It is called the Mega Backdoor. The reason for using the Mega Backdoor is to transfer money into a converted Roth IRA account that will not be taxed. And when you take the money out, and all gains generated are not taxed. However, you are using money that was already been taxed for one portion of the $61,000. So the concept is to contribute the maximum on the pre-tax traditional 401k to get your employer 50% free money. So you have
$30,750.
But then you also do an after-tax contribution every paycheck to have at the end of the year a total of $61,000. The tricky and confusing part is that you need to roll or convert some money. Rolling money means moving the money from one type account to another type. You need to roll the money you invest in after tax into a Roth account to benefits from the tax break from the gain the account will produce in the future, and to have the tax break from when you take off money from the account. One confusing part is that some employers do not allow that conversion. The other confusion is that some employer allows to automatically roll at every contribution, and some others do not. Finally, what is the most confusing part in my opinion is the type of accounts involved. My understanding is that the after-tax is a non-Roth account, and it needs to roll into a Roth IRA as quickly as possible to avoid generating gain while being in the after-tax temporary account, which would be taxed. Hence, it needs to do it at every paycheck or every contribution. They call it Mega Backdoor because the Roth IRA has a limit of contribution per year. By doing that conversion directly, you would hit the $6,000 limit. My understanding is that there is a backdoor in the system which allows you to contribute more than $6,000 if the money is coming from a pre-tax traditional RIA or 401 after-tax account that is non-Roth. Also, the pre-tax traditional 401k is also transferred in this operation. So it means you are doing pre-tax traditional 401k that moves into the Roth IRA and after-tax 401k into the same Roth IRA. At the end of the year, you end up adding $61,000 into a Roth IRA account that will grow free of tax, and when the times of withdrawal arrive, you will also be tax-free. So if anyone finds any anomalies in my explanation, feel free to reach me and I'll adjust. Have a nice day.